Hey everyone, welcome back to Corporate Decoder, where we pull back the curtain on companies, and today we're diving into Forward Industries Incorporated's latest 10Q report. Get ready because this one has some serious digital asset drama. We are looking at a company that has completely shifted gears, embracing the wild world of crypto, and specifically the Solana ecosystem. This report covers their financial health for the 3 months ending the 31st of December 2025, and let me tell you, things look very different from how they used to. Before we jump into the numbers, if you find value in these deep dives into company filings, smash that like button and subscribe for more plain English financial breakdowns. We also have a community Discord linked in the description below, so make sure to join the conversation. Now let's talk about what is really going on. Forward Industries Incorporated is really leaning into its new identity as a Solana-focused digital asset treasury company. Forget the old OEM business, they've essentially sold that off and are all in on buying, holding, staking and trading Solana and related digital assets. Their strategy is to essentially become a major player in the Solana world. Take a look at the balance sheet at the 31st of December 2025 and compare it to the 30th of September 2025. The numbers are wild. Total assets have shrunk dramatically from over $1.4 billion to around $892 million. But the composition is the real story. Digital assets, which were around $1.4 billion in September, have dropped to about $824 million. This is where the big story is. The majority of their assets are now digital, but this also means they are heavily exposed to the massive swings in the crypto market. They also have digital assets. This is restricted to the tune of $2.4 million and loans receivable related to digital assets from a related party for over $31 million. This is a huge shift from their previous business model. On the liability side, we see new items like loans payable digital assets for over $3.4 million. Meanwhile, shareholders' equity has also taken a massive hit. At the 30th of September 2025, it was over $1.4 billion, but by the 31st of December 2025, it had fallen to around $880 million. This massive drop is largely due to a whopping accumulated deficit of nearly $772 million. This basically means that over time, the company has lost more money than it has made. They also have roughly $10.8 million in treasury stock, which means they've bought back some of their own shares. Now let's look at the income statement for the 3 months ending the 31st of December 2025 compared to the same period in 2024. This is where the strategy shift really hits home. Revenues have exploded from about $4.6 million in 2024 to over $21 million in 2025. This is a huge jump, and it is all thanks to their new digital asset strategy, especially staking revenue, which brought in over $17 million. Gross profit has gone from a little over $1 million to nearly $17 million. Their gross margin has soared from about 24.5% to a massive 78.6%. This shows the high profit potential of their new digital asset operations. But here is the big shocker. They recorded a loss on digital assets of over $560 million. This is not a typo. This is primarily due to the sharp decline in the value of their Solana holdings. They also had an impairment of digital assets charge of over $33 million. This illustrates the extreme volatility and risk associated with holding cryptocurrencies. As a result of these massive digital asset losses, their operating loss has widened dramatically from about $898,000 in 2024 to a staggering $583 million loss in 2025. The net loss for the period stands at over $585 million compared to a loss of around $708,000 in the prior year. This is a massive increase in losses driven by the digital asset market. Interestingly, the number of weighted average common shares outstanding has jumped from around 1.1 million to nearly 99.1 million. This is likely due to the issuance of new shares as part of their recent financings. Let's quickly glance at the statement of shareholders' equity for the 3 months ending the 31st of December 2025. It shows the significant impact of their share repurchases. They bought back over 1.5 million shares for about $10.8 million. This is a strategy to boost shareholder value, but it is happening alongside massive losses. They've also authorized a significant share repurchase program of up to $1 billion. This shows a desire to return value to shareholders. But the timing is interesting given the current financial situation. Looking at the cash flow statement for the 3 months ending the 31st of December 2025, tells a story of significant cash burn. The net loss of over $585 million is the main driver here, which is offset by some non-cash items, like the loss on digital assets and impairment charges. Their net cash used in operating activities was nearly $8 million. This is a substantial outflow of cash in just 3 months. In investing activities, they purchased over $335 million in digital assets and sold over $333 million. This indicates active trading and management of their digital asset portfolio. Financing activities show proceeds from their at-the-market offering, the ATM, of over $7.4 million, which is positive, but overshadowed by share repurchases of over $10.8 million. The company is clear about its new mission. They believe Solana is early in its life cycle, superior operationally, and offers higher yield potential compared to Bitcoin. They want to be the leading Solana asset treasury operator. They have also sold off their original equipment manufacturer or OEM distribution segment. This means they've completely exited that part of the business to focus entirely on digital assets. Now let's talk about a crucial part of any financial report: liquidity. The company states they believe their existing cash and working capital will be enough to meet their needs through at least February 2027. However, they also note a cash balance of only about $12 million at the end of January 26. This is a tight situation, especially considering the volatility of their assets. They acknowledge that meeting obligations depends on liquidating digital assets, which in a market downturn might not be easy. They are accounting for their digital assets under a specific accounting standard, ASC 350-60, which means they are measured at fair value, and changes in fair value are recognized in net income. This is important because it means every fluctuation in Solana's price directly impacts their reported profits and losses. This section explains how they value their digital assets basically at fair value. For Sol, it is considered level 1 inputs, meaning quoted prices in active markets, while for things like FWD Sol, their own liquid staking token, it is level 2 inputs. This means they are valuing these on observable market data. Looking at the fair value assets and liabilities as of the 31st of December 2025, we see that digital assets valued at fair value are over $824 million. A significant portion, though almost $201 million, is classified as level 3 inputs, which means their fair value is based on unobservable inputs. This adds another layer of uncertainty to their valuation. They are also engaging in digital asset lending and borrowing. They have a loan receivable from a related party for over $31 million and a loan payable for digital assets of over $3.4 million. This shows they are actively using the crypto market to generate returns and manage their positions. Here we see the breakdown of their digital assets. They hold nearly 5 million Sol with a historical cost of over $972 million, but a carrying value of only about $619 million. This reflects the significant unrealized losses they've experienced. They also have other digital assets, including restricted ones that are locked up for a period. A large portion of their digital assets are staked, that is over $820 million as of the 31st of December 2025. Staking is how they earn rewards on their crypto holdings, and the report mentions they earned over $17 million in staking rewards in just 3 months. The company now operates with 2 reportable segments: digital assets and design. The digital asset segment is where all the crypto action is happening, while the design segment, which provides engineering services, is much smaller and its revenues have actually declined. The digital asset segment shows revenues of over $17 million, but a massive loss of over $578 million before taxes. The design segment, on the other hand, had revenues of over $4 million and a small profit before taxes. This really highlights how much the company's financial performance is now tied to its digital asset strategy. For the design segment, there is a concentration risk. In the prior year, 2 customers made up over 43% of their revenue. While no single customer dominates in the digital asset segment, the overall reliance on the crypto market itself is the biggest concentration risk. This section details their at the market or ATM offering, where they can sell shares into the market. They've sold over 11,000 shares in this quarter for over $7.4 million. This is a way for them to raise capital. An interesting development is the tokenization of their common stock on the Solana blockchain. Over 1.4 million shares have been tokenized, allowing for more flexibility and integration with the decentralized finance ecosystem. As mentioned earlier, they bought back over 1.5 million shares for around $10.8 million. This is a move to try and support their stock price. The basic and diluted loss per S-Hair from continuing operations is a staggering $5.91 for the 3 months ending the 31st of December 2025. This reflects the massive net loss against the increased number of outstanding shares. This is a big one. They have agreements with Galaxy Digital for services asset management and even a digital asset loan. They are paying Galaxy significant fees over $1 million a month for services. They also loan 250,000 SOL to a Galaxy entity. These related party transactions are crucial to their new digital asset operations. The old buying agency and supply agreement with Forward China, which was related to the OEM business, has finally expired. This marks a clean break from their past operations. This section is packed with warnings. They highlight the extreme volatility of Solana investment, the risks of cybersecurity threats and hacks, the vulnerabilities of smart contracts, and the overall uncertainty of the digital asset market. They also warn that if Solana is deemed a security by regulators, it could have severe consequences for the company, including potential issues with the Investment Company Act of 1940. This is a very important section to read for anyone considering investing. The management discussion and analysis reiterates the big strategic shift. They highlight record revenues driven by their digital asset strategy, but also acknowledge the huge losses from digital asset price declines. They proudly mention the launch of FWD Sol, their liquid staking token. They also point out the tokenization of their stock. Overall revenues are up significantly, but the massive loss on digital assets dwarfs all other positive developments. They incurred over $560 million in losses on digital assets. They believe their liquidity is adequate for the next year, but that is based on their ability to sell digital assets, which, as we've seen, can be incredibly volatile. Their current cash balance is modest, and any significant market downturn could put pressure on their ability to meet obligations. So what is the verdict on Forward Industries Incorporated? They've made a bold bet on Solana and the digital asset market. The revenues are up significantly thanks to staking rewards, which is a huge positive. However, the company is still carrying massive losses, primarily due to the volatility of digital asset prices. Their move to tokenize stock and their aggressive share repurchase program show a commitment to shareholder value. But the biggest risk by far is the fluctuating value of their digital assets and the evolving regulatory landscape. If Solana's price tanks or regulations become unfavorable, the company could face severe difficulties. On the flip side, if Solana and the crypto market boom, they could see massive gains. It's a high risk, high reward scenario. What is your take on this bold pivot to digital assets? Do you think Forward Industries Incorporated is positioned for success, or are the risks too great? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.